So what are examples of intangible assets? Here is a list of the examples of intangible assets, such as patent, copyright, trademark, customer list, that is also intangible. And then we have mineral rights, so internet domain names, goodwill. So what is goodwill? We're going to talk about it in a minute. So let's look at some of those intangible assets in more detail. So first of all, patent. Patent is a typical intangible asset. Patent is exclusive legal right to use, manufacture, or sell a product or process. And the legal life of a patent is 20 years. So patent has a limited legal life, that is 20 years. And when we decide to capitalize a patent as an intangible asset, what to include in the capitalized cost? So it depends. If the patent is purchased, we capitalize the purchase price. And the capitalized cost might also include such other costs as legal and filing fees to secure the patent, the attorney fee to defend the patent. So those should be included in the capitalized cost of a patent if the patent is purchased. However, if a patent is developed internally, we can capitalize the legal and filing fee, but the R&D cost need to be expensed. So that is about patent. Let's look at an example. For example, Apple has developed a new device. The R&D cost totaled $3 million. Patent registration cost consists of $2,000 in attorney fees and $1,000 in federal registration fee. Apple also spent $20,000 to defend the patent against Samsung. So how much is the cost to be capitalized on the balance sheet? Please take 5 minutes, work on this example, and you can pause your video for now. So how much is the cost to be capitalized on the balance sheet? Because this patent, it is developed internally. So in this situation, the R&D cost needs to be expensed. The patent registration fee consists of $2,000 attorney fee, $1,000 in federal registration fee, and $20,000 to defend the patent. So all of those other items can be capitalized. So the total amount that can be capitalized is $2,000 plus $1,000 plus $20,000. So that's $23,000. So that is an example. And here's another example of Amazon. So how many of you have seen this, have used Amazon before? So if you have used Amazon, you probably say like they have something like buy now with one click. And so this is actually patented by Amazon. Firms are actually, they're trying to patent everything. Yeah, so and Amazon used to sue Barnes & Noble for its express line checkout for violating its patent. And also, if you have used either iPad, iPhone, you probably, so in your Apple store, you probably see something like this. And so this icon, the shape of this icon, so as you can see, it is not really square. It is kind of round in the 4 angles. So this shape is patented by Apple as well. So firms do try to patent everything. So that is about patent. And then let's look at copyrights. Copyrights are exclusive rights of protection given to a creator for published work such as software, song, film, paintings, photograph, or book. And the legal life of a copyright, that is the life of creator plus 70 years. So accounting for the cost of the copyright, that is similar to that of the patent. The next item is trademark, trade name. So those are symbols and name commonly used to identify a business. And so those are some of its examples. And the legal life of a trademark that is indefinite. The reason it is indefinite is the registration with the US Patent Office. It is good for 10 years. However, it is renewable for an indefinite number of 10 years. So that's how it is indefinite. And what to include in the capitalized cost of the trademark. So if the trademark is acquired, we capitalize the purchase cost. And also we can capitalize the registration and legal fees. The next item, franchises and licenses. Those are exclusive rights to perform certain functions or use certain products or services. And so those are some examples of franchise and licenses. What to include in the capitalized cost? We can capitalize any lump sum advance payment to secure the franchise, as well as any legal cost associated with the contract agreement. However, the periodic payment to the franchisor, those are expensed. So for example, the service fee, which is usually a percentage of sales, the rent, so those needs to be expensed. And the last item I want to talk about is goodwill. So what is goodwill? Let's look at an example here. So this is an ice cream shop in Urbana-Champaign where I went to school. And it's a very popular ice cream shop. I suppose this ice cream shop is valued at $10 million. However, if you look at every identifiable, so if you go into the shop, you try to identify everything you can identify. So you look at every identifiable asset and liability the firm has. For example, it may have some chair. They may have ice cream, which hasn't sold yet, ice cream machine. They even have this is a trademark of the firm. So if you look at everything, you're trying to find out everything you can identify, and you put a value on it. You value them at the fair value of those assets and liability, and then you add them up. So you only get a value of $8 million. So you identify everything the firm has. You put a fair value on those assets and liability, and then you add them up. So you take all of the asset minus the fair value of all of its liabilities, and then it only gives you $8 million. However, someone is willing to pay to acquire this ice cream shop for $10 million. So the difference, this $2 million, that is called the goodwill. And another way to look at this is you can also look at it as the value of the company's unidentifiable asset. So someone's willing to pay $10 million to acquire this shop. However, if you look at everything the firm has and you add them up, it only gives you $8 million. And if you are asking me why would someone pay $10 million to acquire a firm which the sum of all of its identifiable asset is only $8 million, there can be a lot of reasons for that. It could be like the acquirer, so they just like the firm management or not. So they're willing to pay a slight premium to acquire the firm. Or they may feel like if they acquire the firm, this firm may have may be able to generate a lot of synergy with its current asset. So and those synergy, they won't exist just the firm by itself. It is only if we acquire the firm and combine with it with our existing asset, the value will increase. So that may be another reason. So it may just be the firm is actually overpaying. So there can be a lot of reasons for that, but we don't really care what the reason is, because those are literally unidentifiable assets. We're not able to identify it. But for accountants, we say there's a difference, $2 million. We have to put it somewhere. So we give it a name that is called goodwill. And because goodwill, that is unidentifiable, so we cannot measure its fair value directly. Those cannot be identified. Those are unidentifiable. And the fair value of the goodwill, it can only be measured as a residual value. So the excess of the firm's fair value over the sum of the fair value of all of its identifiable assets and liabilities. And also because goodwill cannot be associated with any specific asset, so it cannot be separated from the firm. Or in other words, it is not possible for a buyer to acquire it without also acquiring the whole firm or a portion of it. So that is goodwill. And goodwill is only capitalized on the balance sheet when externally purchased. So that is the what goodwill is. And now let's look at an example. So suppose firm A purchased firm B for 300 billion. Firm B has identifiable asset and liability with the following book value and market value. How much goodwill should A recognize? Please take 5 minutes, try to work on this example, and you can pause your video for now. So how much goodwill should A recognize? Firm A purchased firm B for 300 billion. So this is how much firm A paid for firm B. However, if you look at the sum of firm B's, the fair value of all of its identifiable assets. So actually all of its identifiable asset and liabilities. It has cash with the market value of 100. Inventory market value 50, PP&E market value 200, and then we take out the fair value of account payable of 150. So the total fair value of its net asset is 200. So those part is identifiable. And what we have, the residual 100 billion, that is unidentifiable. And that is also called goodwill. So that is about goodwill.